Hi, this is Sharekhan here from the Currency Advisory Desk with today's report. Well, all eyes are on Scotland, as in the Scottish referendum vote is what is being discussed in markets today. That's going to be the major reason why we'll see a lot of movements in the markets today. Now, as of now, the no side is leading by 57.76%. However, we are getting the results as I speak from the council areas. There are a total of 32 council areas, and around 5 council area results have been published till now, which indicates that the no side has been leading. The Great Britain pound on the back of that has moved to 1.6524. Now this is a high against the dollar in the last 4 years. So we are expecting a lot of volatility on the opening today itself on the markets. And needless to say, if the no side does indeed win this election or win this vote, as we had discussed earlier, we do have expectation that the no side will win. And if that does happen, then we'll see the pound rallying. And we'll also see our markets rallying, and our markets will be higher on this particular news. Looking at what happened yesterday, the European Central Bank had their first LTRO, the long-term refinance option, and it fell short of an estimated 82.6 billion euros was the total LTRO value versus an expectation of analysts of around 100 to 300 billion euros. Analysts expected that this issue would probably gather so much of interest, but since the issue was short, markets are building on to the hopes that now the ECB will probably go in for further stimulus measures. They will probably increase their quantitative easing program plan to go ahead and support the Eurozone further. As expected during the Fed meet, which concluded on Thursday, the US Fed maintained the considerable time clause to its interest rates. We had discussed this earlier also, and we were pretty sure that the US Fed would not move. In fact, in one of the earlier sessions also, we had given you the reasons as to why the US Fed would not move the interest rate hike date earlier. Primarily, the geopolitical tensions are there in the market. Secondly, if you look at it, you've got China, you've got Japan and ECB all on an easing spree. Compare that with Bank of England and the US Fed, who are planning to go ahead and reduce the rate of interest. But that does not favor their markets much, does not favor their economy much if they are the first to go ahead and hike the rates, that is. So on those grounds, we expected that the US Fed would not move the rates earlier, and which is what happened. Also looking at the economy, the US economy is not out of the woods entirely. We are getting a lot of mixed data. Even from yesterday, we got unemployment claim which came in better at 280,000. But the Philly Fed manufacturing index and your building permits came in lower at 22.5 and around 1 million units yesterday respectively. So the data that's coming from the US is a bit mixed. Sometimes we're getting good numbers in terms of labor, sometimes the numbers are not so good. So it's not entirely out of the woods. They cannot go ahead and increase the rates right away as of now. So that's what was the expectation, and that's what the markets have delivered. Looking at our domestic markets, well, the Indian rupee closed at 60.8384 versus the previous close of 60.9293. Yesterday morning, when the Fed, when our markets opened, the rupee did move weaker against the dollar, and there was a lot of rumors that the Fed move has been misinterpreted in our market. However, what we saw was that probably there were a lot of long positions, in the dollar which were being hit by their stop loss, which is why the market moved earlier. But during the second session, the market moved considerably in favor of the Indian rupee, and we saw the rupee gaining around 35 paise from the morning lows. Looking at a more longer term picture, a more fundamental picture of our economy, we expect the flows, the foreign fund flows to shift from the so-called hot money to now smart money. We are expecting more money to move in the form of FDI rather than just hitting the markets and taking the markets to higher valuations. One of the reasons why we expect this is a recent report from Credit Suisse also came in, wherein they stated that there's more flows going to happen to North Asian markets like Japan or Korea compared to South Asian markets like India or Bangladesh or any other South Asian country, that is. And one of the reasons is that the South Asian markets are already up 20% and more than that as compared to, you could say, the Nikkei, which is around negative 2.5%, or you take the take the MSCI, the Korea index also, which is around negative 0.4%. So we are having this sort of cycle wherein funds are going to go there more, the hot money is going to move there more too, because there's still value left in that market. Our markets have already been overbought. In fact, global emerging funds are overweight on our markets by 111%. And even the price to earnings, if you look at the forward earnings of Indian equities, it's pretty much on a very high level. So we're expecting some sort of consolidation going ahead, a little bit of correction as such. And looking at our rupee, we expect the rupee to also move around in that fashion. The dollar rupee MDF is quoting at 60.80, which is up by 0.02%. The dollar index is up at 84.41, which is at 0.02%. Now, even though the pound has appreciated, what has happened is that the euro has sort of depreciated against the pound and in turn against the dollar, that is. So, which is what is balancing the dollar index. Let's look at the technical levels of the futures contract. The dollar rupee futures contract closed at 60.94. We are bearish on the dollar for intraday. The support at 60.42 and the resistance at 61.44. For all the other currencies also, we are expecting a bearish movement, bearing the pound. The pound we expect will move higher against the Indian rupee. And the yen is also bearish. We've got a support at 55.56 and resistance at 56.62. Amongst the events to watch out, we've got only the Scottish referendum vote. That's one of the major events. Besides that, we don't have any sort of much fundamental data. Later on, when our markets are closed, we will be having the Alibaba listing, and that would the IPO Alibaba listing, and that would probably drag US markets further upwards. And that would in turn, if the markets close in positive, we'll see a good opening on Monday also. That's it from Currency Advisory. Thank you.